hoping that everybody is on standby. We have to start our session. The meeting is opened. This is a joint meeting of the Portfolio Committee on Public Enterprise with the Select Committee on Public Enterprise and Communication. The only technical problem we have is that the chairperson of the Select Committee is no longer with us in the Parliament. Otherwise, this should have been a sharing session. We will normally take the first session and then he take the second part of the session. In the light of his absence, I think I will be chairing this meeting if it's acceptable. Without wasting a lot of time, I will just quickly ask the Secretary to provide us with any of apologies before we start the business of the day. But let me start welcoming all the honorable members who are the members of this Portfolio Committee on Public Enterprise, including our colleagues in the Select Committee on Public Enterprise and Communication. Special welcome to our guests, Eskom board led by Professor, and also the executive, whom I think they are led also by the Group CEO. You all welcome, and the media people among ourselves, they are also welcome to our session. If I can only, okay, I've noticed that the Deputy Minister is with us. It's only the Minister that is not with us already. You are welcome, Honorable Minister. Can I get the apologies from Tisang Muchumi?
Thank you, Chair and Honorable. The apologies I received are from Mr. Arnolds of the Select Committee and Ms. Ngwenya from the Select Committee. Thank you.
Okay. I have received the Minister's apology. The Minister is not going to be with us in this meeting due to the cabinet meeting that is taking place currently as we are here. The only person that we have whom I know is always on top of issues is the Deputy Minister. The Deputy Minister is with us, and I think before even I give to the Eskom board and the executive, they will just ask the Minister, the Deputy Minister, to provide us with an overview as we normally do, and then we ask Professor and his team to lead us with the presentation. Deputy Minister, actually this session, honorable members, we are getting a briefing from Eskom on the midterm results and update on the unbundling and the security of electric supply. That is the core of our business today. Of course, we'll have to deal at the end with the minutes of the previous meeting, but this is our core business, getting the briefing by Eskom, and also that's actually the business of our day. Honorable Deputy Minister.
Thank you very much, Honorable Chairperson. Thank you very much for your kind words. Greetings to the honorable members of the Select Committee, as well as the Committee of the National Assembly. Greetings to everyone who's in attendance. The Chair of the Board is here, together with the executive team from Eskom. Chair, perhaps on the apologies, it may not have reached Muchumi that I will, owing to an unfortunate travel arrangement that was unavoidable, I'm going to request to be excused. I have some travel commitments during the course of this meeting. Chair, it is common knowledge that one of the critical elements to the economic recovery and reconstruction that is championed by government, that energy security is a critical component of that. The challenges that we have experienced in that regard fall squarely in the area of responsibility of Eskom together with the other stakeholders. During the period for which the chair of the board and the team will reflect, the performance of Eskom from generation right up to availability will be reflected upon. And it continues to be something we are engaged with continuously. And of course, together with the DMRE and the rest of the government apparatus, alternative energy sources are being pursued at neck-break speed, I may say, so that the situation could be augmented enough to be able not to frustrate the effort of economic regeneration. Without really speaking much, the chair of the board, as you have indicated, is here. And at this point, Chair, I would like to say the board must take both committees on board insofar as performance, as indicated, the interim results, as well as generally the overall direction we are taking, that the board is leading insofar as the transformation underway within Eskom. With your permission, Chair, I can then hand over to Professor.
Thank you, Honorable Deputy Minister, the Chair of this committee, the Portfolio Committee, and members, the honorable members. First of all, may I take this opportunity to wish you well for 2022. It's a new year, and we hope that it will bring, I think, different but positive fortunes to all of us. I'm here with my colleague board members at Eskom and with the executive of Eskom to give you a presentation and update you as to what's happening at Eskom. Just from where I'm sitting, I think the company has become stabilized or is getting very stable. The atmosphere at Eskom, compared to 2 years ago when we all started, it's very different. It's a very peaceful and a welcoming and an engaging atmosphere. I think people are working very, very hard to try and bring security. For what is on the record, you may not be aware, honorable members, that Andre has now finished 2 years of being the CEO of Eskom. And that's quite an important record since Brian Dames was CEO of Eskom. It's a long time ago, but it reflects, I think, the instability that took place at Eskom. And I think he has worked hard with his executive team to stabilize the organization, to bring a new culture which is getting embraced by the staff of Eskom, and by all elements that one sees as a board member. Things are positive, and we're all working for the same vision and same mission to try and stabilize and secure the electricity and energy supply of the country. And we are doing our utmost best. But more importantly, I value these kinds of interactions with the honorable members of parliament in this portfolio committee, because you normally give us the checks and balances that we need. But more importantly, you also reflect, I think, what is happening in the country, to which we must always commit ourselves to know that we are in these positions at the behest of the nation and at the behest of the public, and we must do our best to serve the population. On this note, I would want to hand over to Andre, but I just wanted to remark, I noticed that Mr. Muchumi looks like he has moved into the music field as a singer or something like that, and I congratulate him on this new venture. Without further ado, I would want to call Andre and his team to give us the presentation and the update that I hope will give honorable members a flavor of what has been going on at Eskom. Thank you, Chair, again.
Thank you very much, Professor Makhoba. Thank you for that introduction. Good morning, Honourable Deputy Minister, Honourable Chair, Honourable members, and also members of the Eskom board who are with us today to support us as we engage with the Parliamentary Portfolio Committee. We have prepared a presentation, Honourable Chair, to support us. If I can ask my colleague, Natasha Sitole, to please project this presentation. Thank you, Natasha. So as the Honourable Chair has indicated, we will cover two aspects. The first one is the financial results for the half year, as well as an update on unbundling. And secondly, we will deal with the performance of generation in particular and electricity security in South Africa. For the first part, I will deal with some of the strategic matters. Our Chief Financial Officer, Mr. Caleb Kassem, will then take over to go through the detail of the financial issues. And Mr. Rulani Matimba, who is the acting Group Executive for Generation, while Mr. Philip Dukashe is away on some well-deserved leave, will then take us through the security of supply matters. Mr. Jan Oberholzer, our Chief Operating Officer, will join us a few minutes late. He is en route to Koeberg to deal with some project matters that are active there, on which we will also brief you during the second half of the presentation. Honourable Chair, if I can then proceed with a customary disclaimer, we can take that as read and move to some of the key points. Generation performance has been disappointing. Even though we shed fewer gigawatt hours, we have seen more days of load shedding. So the volume is better, but we've seen more days of load shedding. And that remains a key focus area where our performance clearly is not living up to the requirements and the expectations of South Africa. Transmission and distribution continue to perform well, and we've made some excellent progress, which Rulani will deal with later on the new build program with the 5 operational units at Medupi now consistently performing at the required design levels which were set when the plant was conceived in the first instance. So that's very pleasing progress. From an environmental perspective, we are doing better. So our emissions per megawatt hour produced has been steadily reducing, although Kendall remains a problem area. Our headcount continues to decline. We were at a high of 48,628, and we continue to implement further staff reductions, but important to emphasize, without using forced retrenchments. So all of this has been achieved through voluntary severance packages as well as natural attrition. Pleasingly, and Caleb will elaborate on that, our net profit after tax has increased to 9.2 billion rand for the first half. And Caleb will unpack some of the seasonality behind this number. On the back of some strong sales volumes increases that we saw as we emerged from COVID lockdown. Our earnings before interest, depreciation and amortization and tax, EBITDA, that has also increased by 58% to 44.8 billion. Cost control remains a very strong focus area of this management team, and those results are coming through in a really pleasing way, also aided by an increase in the tariffs. We have been able to reduce our debt by some 15%, and although our balance sheet remains stressed, we are making good progress in steadily working down the debt within the parameters that we have at our disposal. We're very grateful for government support to the tune of 31.7 billion that we've received, and this remains an essential part of the financial sustainability of Eskom going forward. We will talk some more about legal separation, but then finally, from a forecast perspective, the 9.1 billion that we're forecasting, I think we can signal to the committee that there is some upside on that. We don't want to, at this stage, prior to the end of the financial year, give you a number that deals with that. But again, thanks to an improved operational performance from a revenue collection point of view, as well as some very good cost control, we anticipate that there is some upside to this forecast number of a 9.1 billion loss for the full financial year, which of course ends at the 31st of March 2022. Next slide, please, Natasha. Right, if we can deal with generation performance, and I won't elaborate on this too much, considering that Rulani is going to deal with it in detail, but as I said, more load shedding days, even though the quantum of load that was shed is less during these 6 months than during the comparative period. We do make a significant use of our open cycle gas turbines, and that comes at a very high cost because we have to buy diesel to support that. So 4.5 billion rand spent on running those open cycle gas turbines, while higher oil prices and consequently fuel prices, as well as a weaker rand-dollar exchange rate, have had an impact on this increased amount. 80% was due to a volume increase. We're making good progress on our recovery plan, and we are carrying out maintenance all the while. We suffered an unfortunate incident at Medupi Unit 4 due to a generator explosion. That unit is still out of commission. We have subsequently returned Kendall Unit 1 to service following a generator transformer fire. Koeberg Unit 1 tripped, but that was safely returned. And again, Koeberg remains a safe and highly competitive plant, which plays a very important role in the performance of our generation fleet. And we were able to reduce our coal stock to 47 days in a responsible manner. So we're not taking undue risk on coal inventory. And our focus on coal procurement and our coal inventories has really resulted in an improved financial performance. We have seen a slight deterioration in transmission, but nothing to be concerned about. Distribution looking very good. And as I've said, we've made good progress in addressing some of the design defects, and very pleasing performance that we are seeing from the 5 operational units at Medupi. We are continuing implementing these design modifications at Kusile. And for those units at Kusile that are still under construction, we have obviously implemented those, or we will incorporate those in the construction contract going forward. Kusile Unit 4 is in the process of being commissioned. So we did beat the target date that we set in these slides, and we synchronized that to the grid, and that is performing well and playing a strong contributory role, even though we are still in the testing phase. Finally, Majuba Coal, even though there are some challenges with securing coal train capacity, in particular locomotives, due to vandalism on the coal line, we are steadily increasing the amount of coal on rail and on conveyor belt, which assists us with costs, but also with the consistency of quality in our plant. Next slide, please. From an environmental perspective, again, doing well. The issue that really concerns us is our water consumption. Coal-fired generation is inherently a thirsty technology, and we have made this a focus area to improve our water consumption and make sure that we can also behave responsibly towards our environmental commitments in this regard, having regard to the fact that South Africa, of course, is a very arid country, and we therefore need to continue to focus on that. I've mentioned our headcount reduction that continues. Very pleasingly, our lost time injury rate incorporating contractors remained at 0.25, which is really a world-class performance. And I want to thank my colleagues for continuing to be able to operate safely. However, in spite of this, we sadly have to record the tragic deaths of 3 employees and 2 contractors, which is always highly regrettable and completely unacceptable. From a race and gender equity perspective, we continue to improve, and I think this is quite pleasing and testament to the commitment of the board of Eskom to continue to drive transformation, although we do need to do better on our disability equity. So that is a target that we are paying close attention to in order to accommodate South Africans with disabilities as well. Our electrification program is continuing, and then we have improved our preferential procurement spend. So from a triple bottom line perspective, our environmental and societal performance remains strong, with a few areas for improvement, particularly on the environmental side. Next slide, please. My final slide, Chair, before I hand over to Mr. Kasim, who will take us through the detail of the numbers, is on legal separation. We have made very good progress there. Functional separation has been achieved through the process of divisionalization. We put in place divisional boards. We have incorporated the National Transmission Company South Africa State-Owned Corporation Limited, NTCSA. This is a wholly owned subsidiary of Eskom. We have put in place an interim board. We are in the process of identifying permanent directors, which we will be submitting to the Eskom board for approval, subject to confirmation by the Department of Public Enterprises. We've done an extensive due diligence because this is a regulated state-owned entity. There are a number of legal and regulatory issues that we need to consider. And we have commenced trading between NTCSA and our generation and distribution divisions. We have signed an asset transfer agreement with certain suspensive conditions on the 17th of December last year, and we have received Public Finance Management Act approval from the Department of Public Enterprises and National Treasury. We submitted a license application to the regulator just before Christmas. This is still outstanding, and that engagement is continuing. We are collaborating very closely with NERSA on this issue. I think there's alignment that this is a key milestone on the road to legal separation, so we are receiving good cooperation from the regulator there. We also are engaged in the very necessary exercise to obtain the consent of our lenders for legal separation, and then immediately before the State of the Nation address by the Honourable State President, a draft bill was released by the Department of Mineral Resources and Energy to amend the Electricity Regulation Act to support the industry structure going forward. So a lot of hard work, a lot of moving parts, but I think we're making very good progress on the road to legal separation with a view to operationalizing NTC-SA during the current calendar year. We are therefore, by and large, meeting the timelines as set in the DPE roadmap, with generation and distribution following very fast in the wake of transmission. And our intent is to have that separated by the end of this calendar year. With that, Honourable Chair, I will pause and hand over to Mr. Kasim to take us through the remainder of the presentation. Thank you. Caleb, please.
Thank you, Andre. Good morning, Honourable Chairperson and members. Let me get into the financial part. Firstly, I think as Andre has indicated, you will see that all the financial indicators are on an upward trend following the improvement, in particular, the growth in EBITDA from 28.3 billion in September 2020 to 44.8 billion in September 21, on the back of the higher revenue, substantially linked to the tariff increase in this financial year of 15.06%, plus then the recovery of the COVID pandemic here with the growth and the recovery of volumes. That ultimately culminated into the EBITDA margin growing to 33.2% off at 26.06 in the previous year. And ultimately, as reflected, you see your positive liquidity and solvency ratios, in particular, your cash interest cover at 2.2 up from 1.0, and debt service cover at 0.88, literally improving 100% from 0.44 of the previous year. And importantly, we see the debt equity then dropping, coupled with the improved cash from operations and the equity support, that has dropped from 2.52 to 1.6. And you can see then the gearing is now 61% compared to 72 of the previous year. And importantly, this is the first time in the last 5 years that Eskom is able to show a profit for the first 6 months of its financial year. The last time that was in September 2017. If we move on then to the next slide, Natasha, thanks. From an income statement, I've spoken on the revenue. Andre's explained the main driver to the primary energy has been the upward pressure in diesel volumes and in the price linked to that as we deal with the performance of the system, which Rulani will go into more detail later. You will see that from a net employee benefits perspective, that has grown by 2%. Literally, Eskom is making every effort to stabilize and not grow that on the back of a reduction in staff complement through natural attrition and VSPs. And we are addressing that on our other expenses. You will see that increase of 18% from 10.4 billion to 12.2 for the 6-month period is that repairs and maintenance have increased by 1.9 billion to address the performance of, in particular, generation. But we've also had to provide for Medupi Unit 4 that explosion. That was a write-off of 900 million for Medupi Unit 4, and then for Kendall Unit 1 transformer, 86 million rand. And then going down the income statement, as more units are commissioned during the year, that depreciation then increases, and then your fair value is linked to interest rate movements. And then we have our financing costs, which have grown by about 8% year on year, from 15.3 billion to 16.6 billion, ultimately giving you a profit before tax for the first 6 months of 13 billion and after tax 9.2 billion, compared to literally a break even of the previous period for September 2020. Natasha, next slide, thank you. If we just unpack a little more detail, as we recovered as a country from the COVID year of 2020, all categories have increased except for residential, which has dropped by 3%. And in particular, we've seen a great recovery in the industrial sector, growing by 17% and mining by 11.8%. Just want to highlight again the challenges around collecting of our revenue based on IFRS 15. You only can recognize certain customers on a cash basis. We were, again, in terms of the accounting treatment, we could not recognize 5.5 billion of revenue for the first 6 months, compared to 14.6 billion in the previous year. We'll touch on the rear debts a little later. And then as we've highlighted, that we see growth both in the domestic front as well as in the international sales. We move on to the next slide, Natasha. Just touching a bit more on primary energy, I think importantly you will see that the unit costs of coal has grown by 4% year on year. I think it's important to note that generally the growth in coal costs as a rand per megawatt has been double digit in the region of about 15%. This is now a positive achievement, and we forecast that single digit escalations for the rest of this financial year. And then we've spoken about the upward pressure in terms of prices on diesel, that rand per megawatt then growing by 15% for Eskom's OCGTs and the IPPs 13%. You will see that overall that the renewable rand per megawatt has come down, and one can expect that as more and more bid windows are connected to the grid, they're coming at much more lower rates. That brings down the overall portfolio, but we still have the initial bid windows that were agreed at much higher levels that shows the overall absolute amount being on the high end. If we move on to then the next slide. Looking at what is Eskom doing in terms of repairs and maintenance, if I start on the left-hand side, you will see on average our run rate for repairs and maintenance has been around between 6.5 and 7 billion rand historically for the first 6 months. And then in this, for this period, we've already spent 8.8 billion, a growth of 27%. And in that contributing factors is substantially the increase on the generation side from 5.1 billion to 6.7 billion rand. And just reflecting what we spent at the end of March 21 of 17 billion. So that's on repairs and maintenance. Over and above repairs and maintenance, I think it's important to see that there is increased spend on capital expenditure, and September 2020 on 2021 has grown from 10.8 billion to 14.1 billion, a 31% increase. And as our financials improved, we were able to release more CapEx, in particular for generation, to conduct their outages. Next slide. If we look from the financial position, as indicated by the GCE, I think first and foremost, the debt securities, that drop of 15% equating to 71.6 billion drop in debt and borrowings from 463 billion to 392 billion rand. That is on the back of the equity support that we've received, not only in this financial year, which is 31 billion, but let's recall that 56 billion in the previous financial year and 49 billion in the 2020 financial year. I think also to highlight that our liquid assets has improved from 25 billion to 36 billion rand, and yet due to the exchange rate movements and our hedging activities and based on the strengthening of the rand, that has dropped from 36 billion rand to 14.6 billion. We're also focusing as part of our own initiatives to manage our working capital much more optimally, importantly around maintenance space, consumables, and coal inventory levels. We go on to the next slide, Natasha. So just unpacking our debt position and the finance costs. I've spoken about the 71.6 billion drop in debt. Just that reconciliation there from the opening debt and securities. We've raised net of commercial paper 13.2 billion, and we've repaid 36 billion rand in this 12-month period from September 2020 to 2021, and then the exchange rate movements of 18.5 billion to give you a closing balance of 392 billion rand. You will see our average cost of debt is really consistent with the previous financial year, around 9.85%. And just to highlight that our gross finance costs 21.7 billion compared to 23.1 of the previous year. On a net basis, up by about 8% from 15.3 billion to 16.6 billion rand. Next slide, Natasha. Funding for this financial year, Eskom's plan is to raise 41.9 billion in the markets, domestically and foreign. We've already, at the end of September 2021, had commitments of 16.6 billion rand. To date, we've already received and funded just over 25 billion rand, and we're confident that we will close out our funding by the end of the financial year. I think importantly to note that, number one, in terms of the government guarantee utilization, at the end of September 2020, we had 47 billion rand available to us in terms of government guarantees. And just to see the outlook of our maturity profile, that has a run rate in 2022, we still have to service 71 billion rand worth of capital and interest, and then thereafter it averages about 60 billion rand as a combination of interest and capital going forward. Next slide. This is just the cash flow demonstrating that after the revenue of 135 billion and operating cash flows of 100 billion, you're left with this operating surplus of 36 billion. After you've paid for your interest and your capital expenditure and the debt raising and the repayments of debt, it effectively left us with a cash flow gap of 15 billion rand. And that is where the government support was required to ensure that Eskom is able to meet those requirements for the financial year, just to highlight the importance of that. If we go to the next slide. In terms of municipal debt, as I indicated, that has grown by 16% for the first 6 months, from 35.3 billion to just under 41 billion rand. And just to highlight that the payment levels, 81% by municipalities excluding metros, similar to the previous year of 80%. And then the payment levels of the is 50% for the top 20 defaulting municipalities. We are working with the political task team and the multidisciplinary revenue committee to find a solution to address the municipal arrear debts. We have 45 partnering agreements with municipalities, including the top 20 defaulting municipalities. With regard to Soweto, from the beginning of the year to September, that has dropped from 7.5 billion to 6.9 billion. We've written off some in-duplum interest. And in terms of remaining customer categories, there is 2 large customers that owe in excess of 100 million rand. Their combined outstanding debt is 785 million at the end of September. Tasha, next slide. And then, honorable members, if we look at the outlook to the end of March 2022, I think first and foremost, as Andre has indicated, based on the seasonality of lower volumes in the second half of the year. Number 2, we do more maintenance on the generation side. And number 3, summer tariffs being lower than winter tariffs. Our revenue and our EBITDA will drop in the second half of the year. That then reduces our performance for the first 6 months. And effectively, you will see that the EBITDA margin overall drops from 33 to 21.65%. Operating profit then also drops by year end. And as Andre has indicated, our forecasted loss as of September was 9.1 billion to March. I think important to remind the members that over the last 3 years, we've been posting a loss of in the region of 20 billion per annum. So this is a significant improvement. But like the GCE has indicated, we are working to even reduce that loss and make it smaller by year end on the back of cost savings initiatives. And obviously, as the generation performance is restored, we would spend less on your diesel, and that will reduce your primary energy cost. But overall, I think it's a positive position that the losses decrease by such a significant amount from an Eskom performance perspective. And just to remind the members that government support per the MTBPS was a further 21.9 billion in the next financial year and 21 billion in 2024. I'm sure the minister will maybe mention some of this later today in his budget. So just to close off, a better outlook for the year, but Eskom remains focused, number 1, on delivering on further cost efficiencies, and importantly, the link to our operations has a direct positive impact on our financial outlook. Thank you, Honorable Chair and members. I'm done. Let me hand back to Andre. Thank you.
Thank you very much, Caleb, for that overview. Honorable Chair, with your permission, I would now like to hand over to our Acting Group Executive for Generation, Rolani Matimba.
Where is him? CEO?
Chair, I'm here. Good morning, and I was struggling to unmute myself. Apologies for that. And thanks again to you and the committee for giving us the opportunity as Eskom to come and give you the feedback with regard to the security of supply. Let me start by indicating that the picture that you see, Honorable Chair, it's not the picture that we are proud of, as it shows deteriorating performance in all spheres of our business, starting with our energy availability factor, which is sitting currently at 62.5% year-to-date end of Jan, which is actually 2.9% lower than where we were last year at the same time. You can also see, Chair, that we have seen a lot of unplanned automatic grid separation, which we call TRIPS, of our units in this year compared to the previous year. And I will talk to some of the details during the course of my presentation. Our energy availability or our unplanned load losses, they are currently sitting at more than closer to 25%, which is a quarter of the capacity of our plants, which you would agree with myself that it is not really a desirable performance at all. We have seen what we call partial load losses increasing to the levels that is indicated there, close to 5,000 megawatts. And our plant maintenance is still ramping up. It's not where we wanted to be. You would know that we use this time to actually do majority of our maintenance before winter. And we have unfortunately used a lot of our open cycle gas turbine to be able to support the energy needed on the grid in this financial year to the tune of 5.19 billion that we have actually used by end of January 22. If we can move to the next slide so that I can be able to share some of the progress that we have made in our operations. I need to indicate that to date we have got our Quebec unit number 2. It's off for a long outage, for refueling, as well as the replacement of our steam generator. It's one of our critical projects that we are doing in this year, which is aimed to see the life of Quebec Power Station extended by another 20 years of operation. However, we need to report that we have been operating Quebec plant safely. And in this year, we will be doing these 2 major projects. We are expecting to return this Quebec Unit 2 by the end of June this year. And in September, we'll be taking Quebec Unit 1 to do the similar work or similar scope in this year. So this year, it's this calendar year, it's critical for us as we have to ensure that the success of these 2 critical projects to guarantee the performance and the life of Quebec Power Plant going forward. We have also successfully brought in service first synchronized Kusile unit number 4 on the 23rd of December, as the Chief Executive has also alluded to. And we managed to ramp it up to full load by the 11th of Jan. And as I'm speaking to you now, Kusile Unit 4, it is supplying power to the grid. At Medupi Unit number 3 and all Medupi units, we had a lot of defects that we needed to address. We have successfully, using opportunity in the last year, done a lot of work to correct those defects. And we have seen the unit performance improving to greater than 94% availability. And that it's really count for a success and in the work that we have put in this particular plant. It is unfortunate that today we sit with one unit at Medupi that will not be available for a longer time due to the incident that we had late last year. Our relative emission, I will also touch on this when I talk to our recovery plans. We have seen a good improvement and focus at our coal-fired power stations. However, the new requirements on regulation continues to put us under tremendous pressure and threatening our going concern in terms of our operations. We have successfully commissioned our new ash dam at Camden Power Station. Some of you committee members might be aware that there was a time where we had to shut down Camden Power Station due to unavailability of our ash dam, which was caused by the delays that we experienced in the construction of the new ash dam. But to date, we have capacity to be able to put all the 8 Camden units on load. We have seen a success on our preparedness for rain during this past summer season. We obviously have seen a huge amount of rainfall in parts of our country, and we have seen our strategies saving us a lot of unplanned load losses in this past season. And we believe that that strategy continues to really help us to manage these seasonal constraints. We also have done a number of insurance surveys at many of our power stations in this financial year, and all our power stations' rating has been above average, which shows that our plans and our risk management processes are still sound and in place, and it's still pleasing to our insurers to continue insuring our operations. In terms of the commissioning of our Tipla plant at Majua Power Plant, this plant was damaged by extensive fires that we experienced, and we has been out of operation for a longer time, and obviously putting us at a risk in terms of coal supply to Majua Power Station, and pushing us to rely mainly on trucks to be able to keep Majua running sustainably. However, we have managed to bring that plant back in commission, and we are able to offload trains as I'm speaking to you now. And we are trusting that we will ramp up in terms of the number of trains that we see a day, and that will help us to reduce the number of trucks that we put on the road to be able to put coal into that plant. If we can move to the next slide, Natasha. In this slide, I will not dwell much on it. I think I have touched on it. Our performance in this year compared to the previous year, it's shown that we year to date, we're sitting at 2.9% lower than where we were in the previous year. However, I believe that with the many milestones that I have shared in the past slide, it shows that we are slowly turning the tide, and we should start seeing the benefits of some of this plant that we have brought back on load, and the constraints that we have taken out in our operations should start giving us the results, and we should start seeing our availability improving. Let's move to the next slide, Natasha. On this slide, what I would like to emphasize on is that the biggest cause of our unavailability, it remains what we call partial load losses. What that means is that we have got many of our plants that are currently in operation that are unable to give us full capacity due to defects that requires outages to be able to address. And unfortunately, due to us balancing the need for the country, the need to meet daily system demands, we cannot willy-nilly choose to take off this plant at this point in time. We have to follow our planned schedule and make sure that whenever we get an opportunity to take off these machines and do our maintenance, philosophy maintenance, we actually address most of these defects. In the next slide, Natasha, three of the plants that are really have contributed hugely to our unavailability in this current financial year has been Tutuka Power Plant, Kendal, and Duva. At Tutuka, the main issue being that unavailability of the cooling system. Our cooling towers requires major refurbishment to be able to improve the effectiveness of cooling. We have successfully completed 2 towers. We still have got 4 to go, and the project is still underway to make sure that we can address and regain this capacity that is locked in that problem. At Kendal, we had a huge damage in our dust handling plant during the 2018 incident, and we have been working to recover from that. We have successfully done the work on 2 units, and we still have got 4 units that we still need to work on, and we have started seeing the benefits of the work that we have done on the 2 units successfully. At Duva Power Plant, we have seen a number of failures in the past. To date, as we are talking to you, we can only run 5 units at Duva due to 1 unit that was damaged severely. And however, we are slowly seeing Duva improving its performance, though it is not at a pace that is acceptable to us. We are still putting a lot of work to ensure that we support our teams at Duva to recover that plant. On the next slide, we are talking to some of the risks that mainly lead to us implementing load shedding. Many a time we find ourselves sitting with multiple incidents at different plants. At times we have got multiple boiler tube failures that we experience, and also delays in retaining of our units. In this chair, we are trying to indicate that we have actually outlined the issues that are really biting us, and we have put a lot of effort in dealing with this. When I talk to issues of theft and vandalism, we have spend a lot of money to improve our security, electronic systems, as well as personnel at our different sites to ensure that the issues of theft and vandalism does not continue to render our plants unavailable, and therefore pushing us to implement load shedding. In the next slide, Natasha, we are talking to some of our challenges and how we are responding to them. We still find our 9-point plan recovery strategy to be relevant, as it deals with many of the issues that I related to in the past slides, talking to us, making sure that our new plants, mainly Kusile and Medupi, are reliable. And I have indicated that at Medupi, what we have done so far has shown to be yielding the results that we're looking for. So in the next slide, I will be talking to some of these plans in detail, just to indicate where we are. As I indicated, we feel that currently at Medupi, we have reached a point where we have stabilized. The reliability of the plant has improved. As I'm talking to you now, Medupi availability factor, it's a top 10 of our power plants. as I'm talking to you now, we have seen a reduction in unavailability, though we still have got plants like your mills that still requires attention, but we believe that we have made tremendous progress in making sure that our new plant, Medupi, reliability is improved. In terms of our trips, as I indicated in my opening slides, we have seen a huge increase in our trips in this year. One of our contributing plant has been a Matimba power station, which had challenges on the cooling system of that plant due to unavailability of spares. We have since addressed that challenge, and we have started seeing a huge reduction in the number of trips that that power plant experience on a weekly basis. And we believe that we have turned the corner, and we will start seeing improvement in that space. We had lost over and above Medupi 4, we had lost Kendall Unit 1 for a long time due to a fire on our transformer. We have successfully returned that unit on the 3rd of January this year. And we believe that we will be able to keep the unit on load going forward. And in terms of our partial load losses, as I have indicated, Chair, it's contributing more than 10% of our unavailability. On our reliability maintenance program, we are paying a focus on addressing many of our challenges that we have, many of our causes for these load losses and defects, which is constraining our generators to giving us full power on our running units. We are paying attention to those as we implement our reliability program. In terms of the outage slips, as I alluded to earlier, that one of our concern was that when we take these machines off to do outages, we find ourselves struggling to return them on time. And this has been one of our focus areas. And we have started seeing this reliability maintenance program really helping us to reduce outage slippages, which help us in our production planning going forward. In the next slide, we're talking to issues of the human capital. There's a lot of focus that we have paid on this item, as we believe that the resourcing and skills of our employees at our different business units is key to ensure a recovery of our performance. We have embarked on recruitment projects. We have also sourced expertise from different service providers who have partnered with us to help us to recover our performance. Our open cycle gas turbine usage, as I indicated, Chair, earlier, that this year we have used actually to almost double the amount of what we have used in the past year, due to obviously the constraints that we were experiencing on the system, over and above issues such as the loss of Medupi Unit 4, as well as the outages that we have to carry out at Quebec, obviously taking away 900 megawatts of reliable plant to be able to do the necessary maintenance to ensure reliability in the future. In terms of reducing emissions, I had indicated that there's a lot of focus in this area. We have seen improvement in our current plant. However, the decision on which requires us to comply to the requirements has put up to 16 gigawatts of our capacity at risk of immediate shutdown if this decision is to be enforced as of end of April this year. So this is one key area that requires attention of all stakeholders to make sure that we, as Eskom, we are given the space to be able to manage this area within the required business, obviously, principles and capacity. In terms of improving coal management, the positive thing is that as we talk today, all of our power stations have got sufficient coal in their stockpiles. Obviously, there is continued focus in ensuring that we manage all the logistical requirements to ensure that coal it's received with the right quality and quantities at our power plants. This is a continued focus to ensure that we support the recovery and the sustainability of operations. In the next slide, which is going to be my last slide, we are just indicating that as we are working hard to recover, we find ourselves, as I indicated, Chair, that 10% of our unplanned availability is due to limping generators. So generators that are unable to do full capacity, requiring us to take them off and doing the necessary maintenance to be able to do full capacity and have these plants being reliable. On a daily basis, we find ourselves managing 4,000 to 6,000 of megawatts that are at risk. And hence we believe that if we can have additional capacity in the system, it will give us room to be able to speed up recovery of our plants and improve reliability by doing the necessary maintenance that is currently required by our plants. We can sustainably meet the 28 gigawatt average demand of our country. However, we have seen days where the demand goes higher and we find ourselves struggling to meet that demand, requiring us to deploy our gas turbines to a point where we find ourselves running out of stock in terms of diesel capacity. So we require support in ensuring that the current capacity, the additional capacity is acquired to allow us space to do the necessary maintenance on our plants to ensure continuous reliability. Chair, I would like to leave it here, and I believe that as we continue to discuss, we will be able to respond to some of the questions that the members might be having. Thank you very much.
Thank you, Mr. Matebe. I was about to say your time is up. I think you took more than enough time to make your presentation, not necessarily yourself, the entire executive presentation. I think your presentation was very long. You exceeded an hour. But this is a select committee and a portfolio committee session, meaning that the members that are here are a bit long, or it's a lot of members as compared to other sessions we normally had, where there is only portfolio committee that will be raising hands or that will be raising questions. Here I'm sitting with almost 18 people who would be engaging this report and asking questions. I have to start now going through the question. Deputy Minister, first I need to accept your apology. I got it in writing. In fact, I don't know how I missed to make a reference to it. Here, if you have to leave, we'll release you, Deputy Minister. Honorable members, here is the presentation. I don't need hands. I have all your names in front of me. Everybody, if you're not gonna speak, you'll just indicate you not speak. Otherwise, I'll just raise the name of all the members accordingly. I start with Honorable Mkwanazi, who is not well, but I will give her because she is one of the ANC people on this Eskom issue entity. Honorable Mkwanazi, are you in a position to speak? Okay. Seemingly she is not there. I know she did mention that she's not well. She was hospitalized recently to do some operation. Perhaps she's still recovering, but I saw her because she logged in. Let me go to Honorable Kumede.
Chair, can you hear me?
I can hear loud and clear, sir.
Yeah, thank you very much, Chair. Greetings to all the members, as well as the Select Committee, the Executive, the Board, and all other people, including the media, that is on the platform. Chair, thank you very much for the presentation. It's always a very promising, I must say, it's a promising presentation. Trends are indicating that all arrows are taking the upward direction, as well as the comment, the opening comment by the chair that says that they are managing to stabilize the situation. My first question, Chair, then will be, I'll be saying that on paper, things appear to be much more positive, and you can see some positive trends on progress as well as the improvement. But on the ground, it appears declining. I'll be happy if this can help us reconcile this kind of situation, not unless we are still to see results. What is on paper may not be currently on the ground, but I want to send the message to the executive that in fact we always say the taste of the pudding is in the eating. It will be well for us to see the results perhaps being implemented. Chair, my next question will be, I want to say perhaps this one will be directed to the CEO. What could perhaps the CEO, what could be his response if there is a comment that says we are dealing with thugs here, and Eskom always takes an advantage of government because they know that electricity is a critical commodity. They will always be funded. I've hope, Chair, I'm being clear there that there is an accusation that there are thugs, they mismanage funds, they always take advantage of government, that they will always remain funded. My third question, Chair, will be, is there a way that the unplanned maintenance be programmatized? If ever there is a way, because it looks as if there is quite a lot that goes into an unplanned kind of a maintenance or any other activities that in fact are not planned for. My fourth one is in terms of perhaps the projection, the alternative energy sources. When will they be in a position to complement the situation where we are able to say, because of the presence of the IPPs, yes, we've got enough of perhaps energy that will keep us going. There is one thing peculiar, Chair, which in fact, which I'll be interested to know as well, that the presentation is saying there is a decrease of 3% on perhaps the residential. I'll be interested to know what could have caused the decrease of the 3%. But my main interest is we're always told of the residential part that they are always in arrears. We haven't been told of any other businesses that in fact are owing Eskom. As much as this point has been addressed, yeah, because there was a mention of some kind of strategies that are being taken to try and collect, but it wasn't enough in terms of explaining what exactly is the plan or the strategy towards perhaps collecting the areas that are still owed by the community. But again, Chair, I think it will be important to congratulate Eskom in terms of the processes when it comes to the unbundling. I can see that some deadlines are being met, but it will always be good that at times we always remain being afresh that what will in fact be the total benefit when all the process of unbundling is complete, Chair. Perhaps, Chair, let me wait there. Oh, the last one, Chair, is we talk about that should the community exceed or come closer to 28,000 megawatts with a gap of 4,000, right? We will be in danger. What precautions perhaps is the EXCO taking that we don't fall into that pitfall where the demand exceeds the 28,000 megawatts, because 4,000 is very minimal. You think of that community that is coming back, and again we are saying after the lockdown, we have seen perhaps the consumption of electricity going up. So what mechanisms, what have we put in place that will help us, that should we consume that gap that is there, we shouldn't be in fact facing the disaster. Thank you, Chair. Let me wait there for now, and thank you. And I heard the Chair that Disang has become a musician. So I would like perhaps at the end of the meeting that he sings for us. Thank you very much, Chair. Thank you.
Thank you, Honorable Kumede. Can we go to Honorable Katalia?
Thank you, Chair. And Good morning to everybody. Thank you to the Eskom team for the presentation. It is, under the circumstances, a heartening presentation under parlous circumstances. And I think the team at Eskom needs to be complimented under the circumstances in which they operate on making significant progress of a kind which we haven't seen of late. So with that, let us understand that while that is necessary and we applaud it, it's not sufficient, clearly, and I'll come to what is required in terms of presentation, in terms of sufficiency, so that we can do our oversight and the public can be informed. Now, clearly, in terms of financial improvement, which there is, it seems to be largely dependent on tariff increases for financial improvement. And
before you take your path.
Okay, I'll take more. I'm a baby.
No, but Chair, out of order. What is this now? You're busy having your own meeting in a meeting, and then you are even deciding on who must come next. I'm supposed to be next. You're told by your colleague that you must take somebody else before you.
Relax. The chairperson.
No, what is that?
May I please continue?
This is not an ANC caucus. Please.
Chair, may I continue?
We're chairing the ANC caucus here. We're chairing the portfolio committee of parliament.
Order.
Behave.
Honorable, please. Order. This is the meeting of the Joint Select Committee. You cannot just howl here. If you have a problem with the chairperson, just
you invited me. You spoke here. Your mic was on. You invited me because you said yes.
If this is how you conduct yourself in a personal residential area, please respect Parliament. This is an institution.
You must change.
You have a right to call order and seek clarity what is happening. This meeting I'm chairing as a chairperson of this session as per. I'm not just chairing for the sake of chairing. I have been elected to be the chair of this committee.
I don't care about your election. I don't care about your elections. We were also elected to be members of parliament. All I'm saying to you switch on your mic and you mentioned that the person who must come next must not be EFF. You invited me to this.
Honorable Judy.
Will take you out of this meeting if you don't behave yourself.
No, you must behave yourself. You must behave yourself. We're not saying. But this is not an ANC caucus, this thing.
If you continue shouting without knowing what is happening, I've got an
advice. I know what is happening. You said it here in this platform. It's on the record. It's on the record. It's here. I know what you are saying. I don't need to ask what you are saying when I've heard what you were saying.
Can I be recognized in raising my order?
Machumi, cut Ms. Honorable Mawoto out of this meeting.
Kaya, you can do whatever you want. I don't care, but I'm saying it's in the record. No. I heard what you were saying. You were speaking to your own colleague there, telling you that you must not take me next. I'm supposed to be next after Kachalia. You know that. Now you invited me because you switched on your mic and I heard what you were saying.
This is a select committee.
The chairperson has given you an order.
Member out of this session.
I must be allowed to speak after Kachalia. Please.
There's a ruling. You must be taken out.
Please.
Carol, shut up, man. Shut up. I'm dealing with Shay here. Shut up.
I'm going to say shut up to Carol.
Shut up.
Honorable members, please. Disang, can you remove Honorable Mawoto first before I do anything? Take Honorable Mawoto out of this meeting.
I'm not going anywhere. I'm here. I'm going to speak after Kachalia here in this meeting.
Take this member,
don't
please.
Come up with your bossy tendencies.
I'm a member of the committee and I'm going to speak here. No one is going to chase me out of this. No one.
Sam, what is wrong with this, Sam? The person has the rule.
No one. I'm going to speak here after Kachala. Kachala, you can continue. I'm going to speak.
We cannot be held ransom by yourself, Mauta. You must take yourself out.
The song, remove Honorable Mawotwe, please. You did that?
It is out. We are safe.
Okay. Honorable members, when I'm chairing this meeting, there is only one advisor. It's the secretary of this portfolio committee. She has a right to advise me who to be in, how do I take the members and so on. He gave me the list. He has to advise that who I'm not. That is the process I'm working with. I don't need any member to tell me who to follow in this meeting. I'm doing this with an advice with the secretary of this portfolio committee. As long I am not doing unjust by not allowing a member to speak at all. Every member here has a right to speak. I'm not going to undermine that, but nobody will just coerce me as to who to speak. It's only an advice. The son called me to advise. The only mistake that I can apologize is because I didn't mute myself. Thank you. I was allowing Honorable Kachalia to speak.
Thank you, Chair. Just to recap, I was complimenting the Eskom team on their what they have done under difficult circumstances, but was saying that the financial improvement is largely dependent, clearly, on tariff increases, which impacts affordability, which is not satisfactory, and that availability is impacted by current challenges they face, but also will be impacted going forward by the growth of the industrial and mining sectors. Now, having said that by way of putting it into perspective, we need to understand that that the baseload, as explained on slide 11 of the presentation, accounts for 106 out of 118 gigawatt hours. Now, the problem and the challenge lies, as far as I can see, in, given that number, for Eskom in securing that baseload. The question is how. There are a couple of levers here. One, obviously, is supply. The other is demand management, which is not addressed particularly in the presentation. And the other, which is not addressed in the presentation, is storage management, which is a very key area, which is being addressed by other in other geographies who are ahead of us, and we need to learn from that. So what needs to be done? Well, we need to understand what and how. What can be done? What will it cost? What are the debt implications? How are these going to be met internally by Eskom and in terms of government securities and bailouts? Over what period? How can these gaps be filled by Eskom and the IPPs? And how can access to the grid be accommodated? What is required over and above this current snapshot, which I appreciate is necessary, is a simple timeline in terms of short-term, medium-term, and long-term imperatives that address these issues I've mentioned and the gaps that exist. Part of the gaps would be including aspects of the energy mix, and key costed imperatives that are required. Now, if we can understand those and what stands in the way as well, in terms, be it preferential procurement implications or PFMA constraints, or the ones that were listed on slide 25, I think it was. If what I would seek from Eskom going forward is a very simple timeline, as I say, that addresses these issues over short, medium, and long term, saying this is what we are doing. These are the gaps that will exist once we have addressed what we're doing. These are the costs. These are the risks. And this is where we find ourselves. When we have that particular snapshot, a costed snapshot, then we can say very clearly, all right, this makes sense. This is the difficulty we find ourselves in. These are the alternatives that you have posited. Some lie within the ambit of your operations, others lie outside, and we can address it in that fashion. I hope that the team at Eskom will take those comments on board. Thank you very much.
Thank you, Honorable Kachalia. Honorable Komani. Honorable Komani? She's not there. Honorable Bibi.
Thank you very much, Chairperson, and also thanks from the Eskom team of the briefing that you have received today. Chairperson, I think my question that I was going to ask already, Honorable Museso Kumete has questioned it, so I'm covered, Honorable Chairperson. Thanks.
Oh, Honorable
yes,
Nana, I was muted. Honorable Nana?
I'm here, Chair. Thank you very much, Chairman, and good morning to everyone. Chairman, I would want to firstly
Honorable Nana, you're cutting.
The Chairperson of the
Honorable Nana, they'll change the position.
Okay, let me try, Chair. Can you hear me now?
Yes, I can hear you now.
Oh, so I was saying, Chairman. Firstly, I would like to harp on a point that was made by Prof in his opening remarks. That since the departure of Brian Damas, the current group CEO has spent 2 years, and that on its own, it's a record. Chair, I would want to say this. This goes to prove that race does not necessarily play a part in one's quest to make a contribution in the development of his country. You will recall in the previous meetings, I did mention this, that we should treat South Africans as South Africans regardless of race. And here is a white, good South African sitting for 2 years at the helm of Eskom, and they are moving in the right direction. So I hope our country can sit up and take notice of this. Having that said, Chairman, I read it's been widely reported that there's an exodus of qualified engineers and skilled people leaving Eskom. I would want to know what plans, if this is true, to what extent does this hamper on Eskom's mandate to deliver energy for the if it's, of course, are there plans in place to negative impact this might have in our energy security as the country. Secondly, it's an issue that relates to our neighbors in Malawi. Malawi was recently hit by heavy floods, and literally their electricity generation capacity to a greater extent was washed away. Is Eskom neighborly enough, working and assisting our neighbors in getting up and running again? If yes, what risks do we as a country stand to face if we lend a helping hand to our neighbors? Hear me out. I'm not saying it mustn't be done, Chairman, but I'm just saying, it's good to be neighborly, but as you know, charity begins at home. And thirdly, you see, load shedding is a headache for everyone in the country. And we will hear one reason for load shedding this time, generators have tripped. At the other time, we are told, we're given other reasons, which is okay. There is always a reason for everything. But I want to know from Eskom, Chairman, in an event where they pick up human error, I know this is a buzzword. In an event they pick up human error, are these people taken through disciplinary proceedings in Eskom so as to deter would-be offenders in the future? Thank you, Chairman.
Thank you so much, Honorable Nana. Honorable Buthelezi. Honorable Buthelezi Ukona. Inkosi Buthelezi. Okay. Honorable Buthelezi is not there. Honorable Kwankwa. Honorable Kwankwa is also not there. Let me go to Honorable Piri. Honorable.
I'm here. Greetings to yourself, colleagues, and the select committee. Let me start by wishing my colleague Umam Mkwana's a speedy recovery. She must recover in the speed of a jet because we need her. As I allow me, Chair, I've noticed and welcome the new member from the select committee. She's new from the box, Honorable Jabo Mamroben. I know her, I can see she's in the platform, Chair. Let me welcome her to the Parliament and as she joins us. Chair, I've got 2 or 3 questions, they won't be long. Some I'm covered by Honorable Gumede. One, Chair, on the issue of their financial performance regarding the debts, in particular municipal debts. Chair, we are aware about the Malutia Perform, the entity's largest defaulter. They did not agree into the terms or proposed partnering agreement. Then since there's no agreement, we are aware that Eskom has taken the matter to court. But then my question would be to Eskom, on which item or paragraph specifically on the particular proposed partnering agreement are they not agreeing with the entity or Eskom itself? And what are the reasons based on why are they not agreeing? We need specific reasons. If they have that respond now, respond to us, will they respond? But if not, we always welcome written reports on that matter. As I also want to go on the operating performance, Chair, can we be given detailed information regarding the extending or the extension of the lifespan in the Quebec nuclear plant? Specifically, we want the time frame, which is what is the planned duration of that and the cost to for repairing the plant of Medupi that we got explosion into. Can we, I had one presenter when I was presenting to say, if we can fix the unit 4 of Medupi, there will be a balance, or our problems will be minimized. So on that one, all of us were also crying about your load shedding. We need to have the specific time frame. When are they going to fix or repair the plant itself? Chair, the president, when he was speaking on SONA, also stated the issue of the transmission or the unbundling. I want to check with Eskom to give us direct, as all of them, they're here. In terms of the transmission business, did they achieve as being planned by themselves? Sometimes back we were told in December last year they'll be done with the legal processes of the transmission from that division. And have they already started with the electricity trading between their divisions now? So, Chairperson, with the last one on my side, availability, the report shows that Tukuta, Kandal and Duva power stations contributed about 46% of the high plant loss. That boiler or turbine drought, how they call it, with their jargons and generator failure, were the largest component of their loss. Whereas yet their 9-point recovery plan shows that unplanned loss remain a big challenge to address. Does Eskom staffed the capacity to address the cause of the unplanned loss that is responsible for declining energy availability factor? Thanks, Chair. Let me arrest my case here.
Thank you, Honorable Phiri. Also welcome to Honorable Mama Robela. You are welcome, Honorable Member, who is replacing Honorable Matimba, the previous chairperson of the Select Committee. Honorable members, I have interacted with the Secretary saying Honorable Maotwe has apologized. Therefore, I ask him to invite her back if she is there, because she might not be able to log in with the same device if she is taken out. Therefore, I will check if she is here. She will have to indicate with a hand, because I won't know whether she's in or not yet in. Let me go to Honorable Isaac. Is Honorable Isaac present? Okay. Seemingly, he is not here. Let me go to Honorable Dlamini.
Thanks, Chair, and morning to colleagues. Chair, I think what I wanted to raise has been raised already, so I will rest. Thanks, Chair.
Okay.
Are you calling me, Chair?
Yes, Honorable Modise.
Okay, thank you very much. And let me create a new chairperson and other honorable members and team from Eskom, chairperson and CEO of Eskom. Chairman, let me join the queue of welcoming the presentation from Eskom. I have 3 questions that I wanted to ask here, Chair. The first question will be, how much has Eskom recovered from the municipality to date? And which municipality are still owing the energy utility some money? The first question. The second question is, how much is electricity on Eskom grid that is being produced from independent power producers? That one, it will be, do you attribute load shedding to technical glitches or an inadequate coal supply or maintenance schedules, or to all the above? And if it is due to the technical glitches, inadequate coal supply, why it is a recurring problem? That's my 3 questions. Thank you very much, Chair.
Thank you, Honorable Modise. Honorable Mawoto.
Yeah, thank you very much, Chair. So my first question will
welcome back. You must behave.
Chair, you see now, must we go back there?
Order, Honorable Perry. Honorable members, please. Continue, Honorable Mawoto.
Okay, thank you, Chair. So I heard the chairman of the board celebrating 2 years of the CEO's employment at Eskom. But he also forgot to mention that it's been 3 years and counting for the CEO who was appointed. And since his appointment, really, we've seen disastrous operational performance. I mean, we had 30 days load shedding in the financial year 2018-2019. It increased to 46 in 1920, and then again to 47 days in 2021, and 21-22 was sitting at already 51 days. Yet we are paying this man 5.6 million a year. You know, so my question is, why are we still paying the COO so much money when he can't turn around things at Eskom as a COO? Why are you wasting money on people who are not adding any value to this entity? The second one is directed to the IPPs. Chair, under bid window 1 project, we know that the Eskom buys solar PV at 4 rands 2 cents per kilowatts, and they sell it at 1 rand 34 cents. Under bid window 3 and 3.5 projects, Eskom buys at 5 rands per kilowatts, and sometimes at 6 rands, but they sell it at 1 rand 34. Now, we know that the cabinet decision was to support Eskom and NERSA on renegotiated contracts, on the renegotiations of these contracts. It's almost 3 years now since that agreement. So what's the progress on reducing these exorbitant IPPs contracts? Because they are the ones that are really taking money from Eskom. The third question is in relation to the employee salaries. Chair, we know that in the financial year 2021, Eskom was granted 15.06 tariff increase by NERSA, and consequently making 9.2 billion profit for interim results. So why did Eskom decide to unilaterally impose 1.5% salary increase to the bargaining unit employees despite receiving significant revenue increases? And why is the cost containment measures focusing so much on employee benefit costs only and not other cost drivers such as IPPs, coal, diesel-powered open cycle gas turbines? Those will be my questions for now, Chair. Thank you.
Thank you, Honorable Mawat. Honorable Debray. Honorable Debray. Okay, there is no Honorable Debray seemingly. Let's go to our new member, Honorable Mamorobela. I hope, Honorable Member, I'm pronouncing your name correctly. You forgive me if it's bad pronunciation.
Yeah, Mamorobela.
Mamorobela. So much.
Yes, Mamorobela, Chair. And thank you so much for the opportunity. And I would also want to appreciate the members that have welcomed me into Parliament and the committee. There's a very interesting committee. I am very interested in this part of challenges of Eskom, because remember, this is our daily challenge. It's something actually that our communities are suffering from. It's something that needs answers now. And the community also needs to be made understood what is there and what are the challenges, because what is mostly important is us as leaders conveying the message of why are we not providing certain services, because our job is just to be, we are accountable to the communities as leaders and as members of parliament, and to make sure that all those problems that our communities are facing in respect of service delivery, we are here to do our best to make sure that we arrest those. Thank you so much. I would not want to talk much what I did today, because it's my first day in this committee. I was just trying to learn and try to be at the same level with you colleagues. So I was just listening to the presentation, also reading the documents, just trying to understand how far are you guys and what is it that is being done and what is it that we can do going forward. I appreciate being here and being part of you, and thank you so much, Chair. I appreciate the opportunity being given by my African National Congress. Thank you so much.
Thank you, Honorable Member.
Thank you kindly.
Thank you so much. Can we ask our next speaker, Honorable Malinga?
Thank you very much, Chairperson. Greetings to yourself, members of the Portfolio Committee, also members of the Select Committee, the entourage from Eskom, and our committee staff. Chairperson, let me also join in wishing Mam Jabu speedy recovery and also welcoming the new Select Committee member. I also greet the Select Committee members of the Portfolio Committee. Chair, I think most of my questions have been covered, but I only have one, Chair, on the operating cost. Eskom has spent 16.1 billion on open cycle gas turbines to meet the peak demand. Moreover, the diesel used to run the OCGTs accounted for 7.4% of total costs. But OCGTs were responsible for the 1% of the total gigawatts hours produced. It is financially sustainable in the long run. And what are the cost advantages of using OCGTs as opposed to importing electricity from the neighboring countries like the DRC, Zambia, or for peak load management. My last one, Chair, I heard, I don't know, because I came in late, maybe I should start there by apologizing for joining late. The second presenter, I am looking at somebody who's brushing himself here. I don't know whether he's my gadget. Uyangidisturba kancane nje uphulula ikhanda manje. When they talk about Eskom, I think they were talking about the fourth something at Kusile, the fourth unit that is now operational. How is that going to be sustainable, Chair, since we will be facing winter season now? Are we also going to, should we prepare ourselves for load shedding? Do they anticipate any load shedding in the near future? Since we'll be going into the winter season. Thank you very much, Chair.
Thank you, Honorable Malinga. Honorable members, our last member to make the contribution is Honorable Shabalala.
Thank you so much, Chairperson. Greetings to members, greetings to the Deputy Minister of Public Enterprise, Mr. Maswale, and greetings to the Eskom family as led by Mr. Makube, and greetings obviously to the viewers at home. Chair, on the repowering some of the old power plants, President Ramaphosa announced in SONA that government intentions for re-empowering some of the old power plants. However, Eskom liquidity constraints and procurement challenges have resulted in delays in the release of capital funds and procurement of long lead items, leading to the deferral of projects, thereby exacerbating operational challenges. Now, the question is, how will Eskom address liquidity constraints and procurement challenges in order to repower some of the old power plants? The question on uncollected debt, aside from the municipalities, really, two large customers owe Eskom amounts in excess of 100 million, with combined debt of 785 million. Who are these customers, and what is Eskom doing to enforce payment of the combined debt of 785 million? On the municipality debt management strategy, Eskom has a municipal debt management strategy that seeks to assist municipality in debt crisis. Maluti Apofong, the utility largest defaulter, did not agree to the terms of a proposed partnering agreement. What was the partnering agreement, and what were the reasons as to why the municipality refused to agree to the proposal? On the net operating costs, Eskom spent 16.1 billion on the open cycle gas turbines to meet the peaked demand. Moreover, the diesel used to run accounted for 7.4% of total costs, but the OCGTs were responsible for the 1% of the total gigawatt hours produced. This is not financially sustainable in the long run. What are the cost advantages of the OCGTs as opposed to importing electricity from the neighboring countries like the DRC and Zambia for peak load management? On the energy availability factor, the report shows that Tutuka, Kendal, and Duba power stations contributed about 46% of the high unplanned loss. And that boiler, turbine, drought, and generator failures were the largest components of this loss. Worse yet, the 9-point recovery plan that Makgoba, as you mute, shows that unplanned loss remains a big challenge to address. Does this mean Eskom is starved the capabilities to address the causes of the unplanned loss that is responsible for declining energy availability factor? On the Medupi and Kusile power stations, Medupi and Kusile power stations have not achieved the desired levels of performance and reliability due to a combination of plant design, operational and maintenance inefficiencies. This is disappointing, considering that both the government and Eskom invested billions of rands in the building of these power stations. When are we going to see value for our money insofar as Medupi and Kusile are concerned? The electrification connections, despite the successes in 2020, Deputy Minister, the fact that remains that the trend line of the electrification connections decreased in 2021. What are the reasons why the electricity connections do not increase rapidly enough to keep up the demographic growth of 2021, particularly in rural areas? Now, Dr. Dirita, I want to ask the issue on the progress on the legal separation. The National Transmission Company of South Africa was incorporated as a wholly owned subsidiary. When does Eskom plan to appoint the permanent directors and also will the workers in the NTCSA undergo retraining to manage the renewable energy sector? Lastly, the tariff increases. The High Court judgment have allowed Eskom to increase tariffs by 15.06% for the financial year ending 31st March 2022. Ironically, sales volumes for residential use have decreased by 3% between September 2020 through September 2021. How does Eskom balance the need to secure a sound financial position while protecting consumers within household income, constraints against energy injustice in the inequitable access to affordable electricity? The reduction of the headcount, the number of employees at Eskom has been reduced from 48,628 in 2018 to 44,325 in 2021 due to the natural attrition and voluntary special packages, VSPs. Furthermore, the 2016 World Bank report indicated that the level of employees at Eskom was 66% higher than an estimated optimal level. What is an optimal level of employees currently at Eskom? I thank you, Chairperson.
Okay, Honorable Shabalala. Honorable members, I'm seeing...
Chair, may I just interject to say the hand of Honorable Member Farid Esak is up.
Yeah, that's what I'm referring to. Honorable Esak, I did call his name for a number of times and he was not available. But let's allow him to speak.
Chairperson, am I audible?
Yes, you are.
Good morning, Chairperson. Yes, thank you so much for the opportunity. I apologize profusely when you called my name and I did not respond. I just wanted to basically introduce myself as being a new member of the committee, and obviously greetings to members of the Select Committee as well as to the management of Eskom. And I don't really have much to say at this point in time, except that I am excited to be part of the committee and I look forward to participate fruitfully and add some value to the committee. What I wanted to mention, Chairperson, is that I have studied the documents and indeed find them very interesting. But most of the issues that I wanted to perhaps get clarity on have been raised by various other colleagues and individuals on the meeting. And it was obviously, I think, a cardinal issue in terms of the procurement and the stockpiling of the coal and et cetera that Eskom will need to have to contend with, as was mentioned or alluded to earlier, when it comes to the winter months, because I think that is when it's really crunch time. But nevertheless, Chairperson, I thank you for the opportunity to allow me to say a few words, and I look forward to participating. Thank you to the other colleagues. Thank you, Chair.
Thank you, Honorable Ishak. Honorable members, I see that we all have raised the issues. I think now we have to take the mic back to the board and its executive. Professor Mugoba and your executive, can you again take the podium?
Thank you, Kaya and honorable members, for all this very, I think, interesting but very relevant questions that have been asked. I will answer and respond to a few questions that I don't think it would be fair for the executive to respond to, and I will respond to them without maybe going too much into detail so that we all can understand. The main purpose of this presentation was to discuss the separation or the unbundling of Eskom, the finances of Eskom, and the operations of Eskom. I think we have been honest enough, and we're grateful for the comments that we have got, that what we have said were that the finances are improving, the legal separation is on track, but remember that in this legal separation, it's not only Eskom that is supposed to deliver. There are multiple stakeholders that have to do certain things. And what we're presenting is what part has Eskom played as required in the separation process, that we have delivered what is due to us. And I think we are following what the other stakeholders are doing. We have been also honest to say that the operations at Eskom are obviously the Achilles heel. They are giving us difficulties, but we are actually beginning to be on top of them. I think this goes to one of the questions as to the difference between what is on paper and what is on the ground. Basically, it's like going to a hospital. When you go to a hospital these days, you pay your bills and it's reflected in the bank immediately. But your recovery to be back to normal takes time. And I think what the presentation has shown is that quickly, as you can predict, the finances are recovering. It's easy to measure them. But the load shedding issue, which is what people feel on the ground, is something that we're grappling with. We're grappling with it positively. And I think with time, maybe over the next 3 months or so, there will be a progress report as to what's happening with the operations. But I want to assure the committees and members that things are being done properly in a systemic approach in order to deal with this issue of load shedding in the long term. I want to leave it there. The second issue addresses what Caleb Kashalia has said, that we need to have timelines and costing. Clearly, that's a very important issue to have, I think, if you are managing any project, and I can assure him, I think we shall prepare that. But remember again that Eskom operates being controlled or reporting to many sectors or to many departments. And I think we have to put that kind of process again in track so that all the stakeholders have equal input into the processes, and we have a timeline that represents what is in the national interest. But it is an important comment that I think Mr. Kachalia has made, and it's something that we will follow up. The next question that I want to deal with is in relation to the GCE. First of all, Mr. Andre de Ruyter was appointed on the 6th of January, 2020, and not 3 years ago. Now, I want to emphasize that he was appointed 2 years ago and not 3 years ago. What has he done since he has been at Eskom? He has changed the executive of Eskom. He has employed more Black people in that executive than before. He has controlled the costs that have been, almost loose at Eskom. He has taken this issue that is of national interest from the SONA of the president of unbundling or divisionalizing Eskom. The staff that was at 48,000 is reduced about 42,000. In fact, the latest is about 41,000. And this has not been through forced retrenchments. And all of these are measures of a turnaround. So the finances of the organization are improving. The representativity and the structure of the organization is changing. And all that you can say is that's what a turnaround is about that can be measured. Now, there was an issue about the exodus of skills at Eskom. The exodus took place during the period of state capture. It is still going, but it's diminishing, or at least it's less than it used to be. And there is a plan, I think, that is being developed by the board and the EXCO to deal with this matter of skills and as to where it is happening. And as part of the unbundling, we have to be careful as to how we deal with the replacement of skills at Eskom. Are there disciplinary processes that take place? All the time there has been disciplinary processes. I think a report can be produced with that. And hopefully now that the third part of the state capture report is going to be released, a document will be produced to indicate the disciplinary processes and the court cases that have been reported to either to the SAPC, to the NPA, in order to change the culture at Eskom, which is also part of a turnaround. I hope I have addressed, I think, some of the issues. Let me just check if I'm done okay. I think the operational performance of Eskom that relates to what I think the GCE for operation has indicated is something that concerns all of us, and it's something that the board is serious with, and both the executive and the board are trying to deal with that. I'll leave the rest of the questions to be answered by members of the executive, but I just felt that I should give this broad view that I think we are all together with honorable members. We all want to get rid of load shedding because that is the one thing that everybody feels on the ground. But we have had 15 years of neglect of a plant, and it's not going to recover as quickly as we want, or in the same rate as you can deposit your money into the bank and it's reflected at the end of the day. That's not how things happen. I think we will have to deal with that systematically, slowly, deliberately, and get it right so that we don't end up with these situations that we've been experiencing, all of us in the country. Thank you again, Chair and honorable members. I hope that Andre and the rest of the team can answer the rest of the questions. Thank you.
CEO.
Thank you, Honourable Chair, and thank you to Professor Makgoba for his introductory remarks. If I may try and respond as best I can to the questions raised by the honourable members. In terms of the decline on the ground that the Honourable Gumede referred to, yes, we agree that we need to improve our operational stability. That clearly has to be our number one metric. However, we do so against the backdrop of having to continue to take offline significant capacity to conduct maintenance in order to improve the overall predictability and reliability of our generation fleet. While we carry out this program of so-called reliability maintenance, we unfortunately, unavoidably, are increasing the risk of load shedding because we reduce the capacity. If we do not carry out this reliability maintenance, then the risk will just increase to unmanageable proportions, and the risk of significantly worse load shedding will increase. So this is where we are. We need to intervene now, and we need to carry out this reliability maintenance. I'm not quite sure who the thugs are that the honourable member is referring to, but there is definitely no intention on the part of Eskom management to take advantage of government. That's not the plan at all. We do engage regularly with National Treasury. I can give honourable members the assurance that they part with their money with great difficulty. So there's definitely no free flow of money into Eskom's pockets. We have to put up a very compelling case. We do have a very constructive and collaborative relationship with National Treasury, and I must thank the colleagues there for working with us to find solutions to the very large debt that Eskom carries. The capacity shortfall that we experience, that is largely a question of how soon can we add additional generation capacity to the grid. The main lever that has to be pulled is to expedite as quickly as possible new capacity additions, predominantly through procurement, which is conducted by the IPP office, run under the auspices of the Department of Mineral Resources and Energy. We have seen the preferred bidders being announced for bid window 5. I may add at hugely competitive prices, between 43 and 46 cents per kilowatt hour, which is roughly half of the cash cost of our coal fleet, just to give an indication of how the technology has improved since the days of bid window 1 and 2. So there's been a real learning curve with renewable energy. Eskom itself has very limited means to procure additional energy. That is in the hands of the IPP office. But one of the key enabling levers to accelerating the addition of new capacity is to unbundle Eskom, and that is why this has been such a key strategic imperative for the board and for management to drive this, so that we can attract more private sector investment into electricity generation without the fear of unfair competition with Eskom generation. And that is why this is such a key initiative for us, and why we have prioritized that. As soon as we can put more capacity on the grid, and Eskom has recently announced through the Minister of Public Enterprises that we will make available land in Mpumalanga for lease to investors in generation capacity to connect to the grid. The sooner we can address this gap of between 4,000 to 6,000 megawatts that we estimate is holding us back from supplying the country's needs in terms of available electricity supply. I may just stress, Honourable Chair, that grid access does remain one of the key constraints to adding this capacity. We estimate that we will have to add between 8,000 to 10,000 kilometres of new transmission line over the next 10 to 15 years at a cost of some 118 billion rand. And that will, of course, take considerable time to complete. And hence we are conducting an assessment of available grid capacity in order to allow IPPs to connect to the grid sooner rather than later, that we can add this new capacity. With regard to the rear debt, our top customers comprise outstanding debt to the tune of some 259 million rand. In relation to the total overdue debt of some 50,815 million rand. So the commercial debt that we have that is overdue is really quite small. The bulk of it relates to the municipalities. Maluti Apufong in particular continues to increase. It now sits at just under 7 billion. So that's an arrear debt that keeps on increasing. In response to some of the questions raised by honourable members regarding the reason for the failure of the agreement, the partnering agreement, Eskom was very prepared to assist the municipality through an active partnering program to conduct audits to ensure that revenue was collected, to invest in maintenance, upgrade equipment, and to ensure that municipal distribution in Maluti Apufong was conducted in a solid business-like way. However, we required the municipality to ensure that the proceeds of payment of the collection of electricity accounts would be paid into an Eskom bank account. The municipality, for reasons that you would probably have to ascertain from them, insisted that they wish to have control of that bank account. Unfortunately, based on previous payment patterns experienced from that municipality, Eskom regarded this as a deal breaker where we were not willing to entrust the revenue received to this municipality while we were having to bear the burden of investing in capital and operating their distribution system. So that was the main sticking point, Honourable Chair. With regard to tariff increases, obviously we are very aware of the negative impact that above inflation tariff increases has on the economy, on households, but also on business and industry. Unfortunately, due to a number of adverse tariff decisions, which we have successfully challenged in court, we are now in a position where we have to play catch-up, and that results in a backlog of just under cumulatively 380 billion rand in revenue that we need to recover. And it's not coincidental that this amount of revenue that is in arrears due to adverse tariff decisions is very close to the total outstanding debt of Eskom. If we had cost-reflective tariffs, we would not be in this untenable debt situation that we currently find ourselves in. This is a very difficult situation, and while we empathize, cost-reflective tariffs have to be one of the key levers that we pull in order to make us financially sustainable. The Honourable Kachalia has asked for short-term, medium-term and long-term imperatives. Honourable Kachalia, I think this is a very rich topic to be discussed, and maybe in a different meeting we can share some of the strategic thinking that is going on inside Eskom, relating not only to the addition of new transmission, distribution and generation capacity, not only by Eskom, but also by private investors, but also how we can pivot from a very large reliance on an aging coal-fired fleet that is not reliable to over time migrate to a cleaner and greener electricity supply industry as part of the just energy transition. Those plans are in place. We are continuously engaged in discussions with our board on this matter to inform our strategy and how we execute it. And of course, the funds made available at COP hopefully will play a key role in unlocking the implementation of the strategy. But we would be very keen to engage with this committee on that. But I think, Chair, with respect, time does not allow for us to explore this deep vein right now. The Honourable Lindy inquired about skills leaving Eskom. Yes, it is a challenge, not only technical skills, but also some of our business and financial skills. Eskom is a very good school to learn skills. And as such, our most talented employees are very sought after, not only locally, but also internationally. And we therefore have to work on strategies, not only to retain them, but also to ensure that we recruit and train our own staff to the point where we can replenish the skills that we lose. And our HR group executive, Elsie Pule, and I are engaged in a discussion. And as a matter of fact, I'm going to spend 3 hours tomorrow at the Eskom Academy of Learning to develop a strategy in conjunction with the group executive to ensure that we can step up our training efforts, which regrettably have also been left by the wayside for reasons that are frankly quite difficult to comprehend. So it hasn't received the necessary attention, but it is very much top of mind of the board. And the board is, if I may, Professor Makgoba, putting quite a lot of pressure on the executive to elevate the importance of our people and our skills on a continuous basis. Regarding Malawi, Malawi is not a customer of Eskom's. They are not part of the South African power pool. Countries in the SADC region with whom we trade on a regular basis. We have not received any request for assistance. If such a request is made, possibly through DIRCO, we will consider it. But at this point in time, as the Honourable Member quite correctly remarked, charity starts at home. We've got our plates full to do the job that we have in South Africa. So we will consider a request, but at this point in time, nothing is on the table. When it comes to human error and disciplinary processes, we believe that human error often is not solely due to the individual making the error, but also to broader systemic issues with regard to inadequate training, inadequate management, and inadequate supervision. So increasingly, we try and eliminate these errors, not by pulling out the stick to beat the employee who has committed the error, but also to address the broader systemic issues so that we can prevent a recurrence rather than resorting to disciplinary actions. The transmission unbundling, as Honourable Piri asked about, we did achieve the establishment of this legal entity, National Transmission Company South Africa, SOC Limited, on the 17th of December. The asset agreement was signed, and we are now in a position to commence trading. The day-ahead market and the proxy for an electricity market is already operational and is in place, but we are awaiting the transmission license. Because this is a new legal entity, we have to get a new license. We can't simply commence operating, and therefore that is the major outstanding item, in addition to the lender consent, which I also refer to. The Honourable Medici asked about the municipal debt. We've got a list of the top 20 debtors: Maluti Apufong, Emelatleni, Machabeng, Mfuleni, Govanambeki, Lekwa, Ngwate, Tabachu, City of Matlosana, Ditsobotla, Mbombela, and so forth, owing a really significant amount of money, totaling some 45 billion rand. So this does remain an intractable problem that we are trying to address through the political task team under the leadership of the Deputy President. But it is a cause for concern that Eskom has to absorb the cost of supplying electricity to these municipalities. Of course, we are interdicted by court order from cutting off supply to these defaulting municipalities. So one of the key enforcement levers that we have when it comes to our industrial customers simply is not available to us. The question about the root cause of load shedding is really related to the lack of reliability and predictability of our plant. Inadequate coal supply has by and large been addressed. The average coal inventory currently sitting at about 47 days, slightly higher than that, which is well in excess of the minimum requirement as stipulated in the grid code. So coal supply should not be an issue. We did have a recent interruption of coal supply at Matimba. That was due to interruptions on the coal line operated by Transnet, where Transnet Freight Rail did not have enough diesel locomotives available because the electric locomotives were unable to operate due to cable theft on the overhead line. So that prevented us from supplying Matimba with adequate coal. Honourable Mahotwe asked with regard to IPPs. Yes, it is true that IPP power procured under bid window 1 and 2 in particular are significantly more expensive than the cost of our own operation. Those are legacy contracts that we cannot simply terminate. Significant loans were taken out by the investors on the back of Eskom contracts, also underwritten by National Treasury guarantees. So if Eskom were to renege on those contracts, then National Treasury would have to make good the difference. So we can't simply unilaterally amend those contracts. However, I think it's important to recognize that at the time when these bid windows were issued, they were regarded as world-leading. We were recognized internationally for putting in place this IPP program, and they open up the opportunity for a new industry to arise. The IPP costs are regarded by NERSA as a pass-through cost. So while the logic may be that we pay R4 and we sell for 134, on the NERSA cost calculation, the full cost of the IPPs is allowed as a pass-through cost to the final consumer. Of course, NERSA sometimes then does not allow the rest of our costs to be entirely cost reflective, and that's where the discrepancy comes in. With regard to employee salary increases, I think we've come out of a period where we have had successive above inflation wage increases for our bargaining unit. This obviously has a compounding effect. We were also one of the few entities in South Africa that during lockdown did not retrench or reduce salaries. So we were able to keep all of our staff employed during that time. And we believe that given the constrained financial environment in which we operate, where the alternative really is to approach the taxpayer for bailouts, implementing an increase of 1.5% was, in fact, a responsible move by management, bearing in mind that management itself hasn't had an increase for some 4 years. So this is a matter currently before the CCMA, and we will abide by the outcome of that process. When it comes to importing electricity from the DRC and Zambia, the DRC we are not connected to with a transmission grid. Zambia we are. Zambia, from time to time, when there is surplus hydroelectricity available from the Lake Kariba hydroelectric scheme, they do make available electricity to us that we can buy from them. So we do import electricity from them, but of course that is unpredictable and it depends on their own needs. So we do buy from the power pool as and when. Kusile 4, we managed to beat the time for synchronizing that unit to the grid by about 6 months. So that was, I think, a very good achievement by the project team. And as we speak now, that unit is delivering 740 megawatts to the grid. Obviously, it's still being tested. The engineers are running through a battery of tests before this unit is declared to be in commercial operation. Once that happens, then we will be able to rely on it. And currently, the prognosis for it being in place by winter of this year is very positive. The Honourable Chabalala asked about the just energy transition and possible delays. Yes, we need to fund all of this, and that is why the COP26 money is so important. Obviously, we need to be careful that we don't assume more debt. And again, we are in discussions with Mr. Daniel Manele, who has been appointed to head up the climate funding negotiation on behalf of the Republic of South Africa. And we enjoy a very cordial and very constructive relationship with him and his team. And we look forward to Eskom being allocated sufficient funds to allow us to execute that, obviously while bearing due heed to the fact that we need to be financially responsible as well. The customers that owe Eskom, non-municipal customers, Transnet owes us 365 million. EDM of Mozambique owes us 420 million. So those are the two large customers that collectively owe us 785 million rand. I would like to, just before I hand over to our COO for some technical responses on Kuberg, just quickly deal with legal separation. We have identified a short list of candidates for the permanent board members. This is being considered by the Eskom board. Once the Eskom board is satisfied, we will obtain the concurrence of the Department of Public Enterprises as our shareholder, and then we should be in a position to make announcements in that regard. We are retraining our staff for renewable energy. We are in the process of establishing a training facility for exactly this purpose at the Komati Power Station, which is the first of our power stations to be repurposed and repowered. So we're quite excited about this. We are collaborating with the National Union of Mine Workers. They support this training initiative, which I think is extremely constructive and very positive, as well as with the wind and solar energy associations to ensure that the curricula that we use are useful to Treasury. And then with regard to the World Bank report, I think that World Bank report has been with respect, by and large, discredited as relying on incorrect data and incorrect benchmarks. So the optimal headcount is probably in the order of about 38 to 39,000, bearing in mind that as we repurpose and repower, we will also need staff to operate those facilities. So I think we are quite quickly approaching a level of stability when it comes to the overall headcount for Eskom. If I could ask Mr. Jan Oberholzer to please give us an update on Kuberg life extension, as well as the return to service date for Medupi 4, and also the plan for dealing with losses at Tutuka and Kendal. Please, Mr. Overall, sir.
Honourable Chair and honourable members, Andre, thank you. Actually, I am at Quebec as we speak. We have opened the breaker for unit number 2. So we have 2 units here of 920 megawatts each. So we have opened the breaker for unit number 2 to basically do a few things. One being the refueling. So we've been through the phase of running the unit for quite some time, more than 454 days. So it was time to refuel it. So that is one of the things that we do during this outage. The second one being normal maintenance that needs to happen, but then a very important project, and that is to replace the original steam generators by 3 new steam generators. Now, that is a massive project. It's the first time that in the Quebec history of 36 years that we have such a big project. So we do have some interesting challenges. We do have a contractor from France, Framatome, that is our partner. So together we are seeing how successfully we can execute this outage. So this is one of the projects that need to take place to extend the life of Quebec by another 20 years. So we plan later in the year, maybe very early next year, to take the second unit number 1, also off for a period of a little bit more than 5 months, to also then to do exactly the same. At that time, we will be at the end of the fuel. So we will refuel, we'll do normal maintenance, and then we will replace also the steam generators on unit number 1. So as I said, the replacement of the steam generators on both units are important and a requirement because of the age as well as the way that they operate to extend the life of Quebec by another 20 years. Now, over and above these 2 massive projects, there are a number of other projects that we need to do, which we call life extension projects, which need to take place over the next 2 years, because we need to have the approval of the license by the middle of 2024. So progress is proceeding quite well. I am quite pleased. So I'll be engaging now with the colleagues for the next day and a half, and just to track progress. But I am personally comfortable that we are progressing extremely well. As I say, we do have challenges, but we deal with it. Life is not always fair, so we need to deal with those. We also have established a very positive relationship with the national nuclear regulator. We understand and we respect fully what their role is and their oversight is, and they obviously is making, I wouldn't say they make it difficult for us, but they are fulfilling their role the way it's supposed to be. And so they make sure that whatever we do adheres and makes 100% sure that it's according to the safety regulations as prescribed. So all in all, we are still, as we speak, as I said, unit number 1 is online. It is producing, I think, 905 megawatts when I looked a while ago. So it's at full load and it's performing extremely well. Now, the return to service of unit number 2, the one that is on outage, although the aggressive plan was for end of June, hopefully by the end of the next 2 days, I'll be able to understand fully what the return to service date is, because it's critical to make sure that we put that peg in the ground, because Eskom's generation production plan depends quite a lot on the return to service, successful return to service of this unit. In terms of Medupi 4, the final investigation will be completed by the end of next month, by March. So we have preliminary investigations. We have taken the strategy to the board that has been approved. And the return to service date, the way we see it now, will only be in August, September 2024. So it is really a challenge for us to have 720 megawatts not available for the next 2.5 years. So it is really a challenge. Then in terms of Tetuka, Duva, and Kendall, we maintain, as maybe I need to come back to what Rulani, the acting GE generation, said during his presentation. Although we do have significant challenges related to these 3 power stations in terms of unavailability of some of the units, as well as partial load losses. In all fairness, we need also to take note of the fact that, as Rulani has said, some of the cooling towers, so at Tetuka specifically, there are 6 cooling towers, and we've only had the opportunity to fix 2 of them. So it's still going to take a year, about a few years to then do the maintenance and do the refurbishment on the other 4 cooling towers. And up until then, we will not be able to have a very reliable power station. So the reliability is not there yet. We're still experiencing challenge, but we have to now invest and to fix those cooling towers going forward. On Kendall again, although the performance has improved over the last number of months, we're still running with unavailability and huge partial load losses. And that is because of environmental challenges that we do have. So I don't know if you can recall back in 2018, in the middle of 2018, we had industrial action, and that had a severe impact on, the emission side of the power station, the fabric filter bags. So that is something, again, as and when we have the opportunity to take units out, we then maintain and we fix and we refurbish what is required. On Duva, as we speak, we have 3 units running out of 5. So unit number 3 is, the decision is made by the board that we will not invest any money to refurbish that unit. So we will be without that unit. But we also have then significant challenges on the rest of the power plant, which have been unfortunately neglected over a number of years. So these 3 power stations, I can assure you, are receiving the necessary attention on a daily basis. That I can assure you. We are looking every Monday morning and every Friday morning at 5 a.m. in the morning. We look at all these power stations. We have dedicated focus on what the performance on these stations are. So, Honourable Chair, that is a feedback, Andre, the feedback that I have in terms of the questions posed to myself. Thank you.
Thank you, Jan. Honourable Chair, if I may hand back to you.
Thank you, CEO. We just looking at the time now, perhaps if we can get, because we are left with the 10 minutes and I don't want it to be just wasted. If there are 2 members who would love to quickly make follow-up, I can take those 2 members. Can you cite on the list, just put your hand there on your gadget so that I can see it. Okay, seemingly honorable members are covered. Let me take therefore this opportunity to thank Eskom board led by Professor Mohoba and the executive of Eskom led by the CEO, director. I think we are slowly coming closer to the achievement of our objective. One of our major enemies here is this problem of load shedding. The sooner we put that behind our back, the better. I think in relation to the information we have received here, there is a progress that is being executed by the executive together under the leadership of the board to deal with these problems and take this thing of load shedding and improve the quality and the availability of the electricity to all South Africans, because this has a lot of consequences on the economy. Therefore, we are happy that there is that progress. However, I think if you listen to the trend of the questions, there is also a concern about the forward and the backward kind of process. Today we get a very good presentation and we leave the portfolio committee upbeat, and a few days or few months or a month down the line, there comes another problem that one cannot even get an explanation with immediate effect as to what is happening now. I think though the questions, if we listen to them, they are more concerned about those kind of one step backward, one step forward, and so on. I think as members of this portfolio committee, we will be looking closely, and while we are appreciating the report, but we'll put our eyes on you guys, because you are the people who are supposed to assist us to deal with this problem. To CEO, I did forward some complaints that I've received, and I'm still expecting you to respond to those complaints. I am not I'm not an executive of Eskom. People, when they send the information to me, clarity or needing my intervention, all I do, I forward to the executive, including to the minister at times, with the hope that those issues I will be advised in terms of how far and what is the problem in relation to that. So I can also give a proper response to those citizens that will complain to us. Some of our citizens are not clear about the role of all these role players in the energy sector. You know, some will confront you when it's load shedding, even on the road while you are walking, and ask you what is this and this and this. And sometimes they don't know that actually we're not running Eskom. We're just a portfolio committee which is given a responsibility to do oversight on Eskom. There is an executive that is running Eskom. There is a board that is overseeing the governance, that is playing a governance role in relation to Eskom. Therefore, we must assist each other in the actual achievement of our goals. When we seek clarity, let's get those clarities so that we are in a position to help each other and to defend each other when we need to do so. I'm not that kind of person who is shy to defend the board of Eskom or the executive of Eskom if it needs be. If you are being tackled without a board, you know, I do that. Where there's a need to clap hands, I do that. I'm not shy to do that. But also, when I don't see a problem, and I have a problem, I will be one of the people who will be sharply raising the issue. With all those words, thank you, honorable members, for your participation and the question you have raised. I didn't even have a space to raise a small thing because almost all of you covered anything that was in my mind, even in fact empowered me with your questions to this executive and the board. With those words, the meeting is adjourned. Thank you.
Thank you.
Thank you, Chair.
Errol, you must behave.
The trouble,
Recording stopped.